In our quest to identify companies with significant potential to grow in the medium term, we have identified Nelcast as one of our discovery ideas. As of 30th September 2022, promoters held almost 75% stake in the company. Nelcast is into manufacturing of ductile and grey iron castings. It is the only casting manufacturer with a product range from 0.5 to 400 kgs. Plants are in close proximity to Chennai, which is a major manufacturing hub for automotive companies that forms both a key customer base for Nelcast and a reliable source of steel scrap, which is a crucial raw material. All three plants are within 15 to 110 kilometers of India's largest source of silica sand near Gudur. Close proximity to Krishnapatnam and Chennai seaports gives it easy access to reach the clients around the world. Nelcast products cater to OEMs and Tier 1 customers in commercial vehicles, tractors, off-highway equipment, railways and passenger vehicle segments. So what's making us optimistic about Nelcast? Number 1, favourable CV cycle. The Indian tractor industry volumes touched an all-time high in FY21 and are expected to remain healthy. Domestic M&HCV sales are expected to grow at a 22% CAGR from 2020 to 2025 to reach 6 lakh units in 2025 from 2.2 lakhs in 2020. Heavy-duty trucks account for more than 55% of the total M&HCV sales in India. With the economy reopening and with strong investment in infrastructure, demand for CVs is better than expected and we expect the cycle to remain strong in the medium term. Nelcast is among the few companies in the industry capable of meeting the requirements of the top global OEMs and Tier 1 customers. Some of the major export customers include the likes of Daimler, Dana, ZF, American Axle Manufacturing, Detroit Diesel, among several others. Nelcast exports machine castings to reputed corporates in North America, Europe and Southeast Asia. Now in FY22, the revenue from exports stood at 221.5 crores compared to 126 crores in FY21. On the exports front, Nelcast recorded a revenue of 72 crores in the June quarter, a 48% growth year-on-year and 33% growth quarter-on-quarter. It plans to get into higher value-added castings for export markets, which will eventually improve the margins. Nelcast is currently launching 4 new products for pickup trucks in the light vehicle segment in North America and is also increasing the share of business in its existing markets. Nelcast's Pedaparia plant, which was set up in September 2020, has a capacity of 60,000 metric tons and with current utilization of around 15%. Lower utilization at the plant was due to power cuts in the June 22 quarter, and some of the products which will be manufactured there are currently undergoing testing and awaiting customer approvals. We expect utilization levels to increase to 25% in this fiscal, which is FY23, and to around 50% in FY24. Apart from the capacity in the 3 existing plants, Nelcast can increase capacity by another 50,000 metric tons through the brownfield route at a capex of 60 to 70 crore rupees. Nelcast has invested around 40 crores in a 100% owned subsidiary which has 400 acres of land parcel. Now the management does not plan to infuse any further equity in it. In the next 2 to 3 years, in fact, they plan to divest it. We expect the divestment proceeds to be used for reducing long-term debt and margins for working capital requirements. Meanwhile, in FY22, EBITDA per ton was 7,880 rupees versus 8,258 in FY21, while for the June 22 quarter, EBITDA per ton stood at 9,920. Now, on the back of higher volumes in exports, supply of value-added castings and operating leverage, EBITDA per ton is likely to improve to 10,500 in FY23 and 12,500 in FY24. The June 22 quarter saw lower production due to electricity cuts and higher than normal summer temperatures. EBITDA margin saw marginal improvement on a quarter-on-quarter basis. Net profit grew by 15% impacted by higher effective tax rate. Nelcast has been in the business of castings for more than 3 decades in which they have experienced several CV cycles. Nelcast is well placed to play the CV upcycle and the emerging export opportunities that are playing out, along with better capacity utilization and higher operating leverage. Tapping the export markets with various certifications and approvals from customers will result in newer opportunities. The time taken for these approvals for export markets also leads to stickiness in the supply arrangement and opportunities to supply in other markets where the customers have their plants. Nelcast uses steel scrap as their main raw material and prices are complete pass-through with a lag of a quarter. Steel scrap is available domestically and there is no risk of imports. We remain positive on nelcast and recommend investors to accumulate the stock at current levels and add on declines.